Good afternoon. Thanks everybody for joining. My name is Bartley O'Dwyer. I head up the global business development effort at Consero Global. And the goal here today is to introduce the audience here to our first independently commissioned survey of CFOs. And we partnered here with Wakefield Research, and Wakefield is a renowned market research firm. They work with several types of clients, including firms like Deloitte, so expertise in finance and accounting, and firms like Insight Venture Partners, which is exciting because that's our core client end user as well. And so let me move forward here. So really, the survey is of 100 CFOs of tech and business services type companies. They are US-based CFOs working in the software, tech, and business services space with annual revenue of between 10 million and 200 million. These are Consero's core constituents, both the investors and the CFOs of these companies. And let me take you through the agenda a bit here as well. So we're going to run you through an executive summary, the ideal state of the finance and accounting organization, some benchmarking. What does the ideal finance and accounting organization look like from a people, processes, systems, investment? From the CFOs themselves, what are some of the hidden costs and risks that are around the corner when you're a new CFO in a seat? What are those CFOs saying? And then ultimately, we'll bring it back around with some learnings for everyone. But again, I mentioned my name is Bartley Dwyer. I head up the global business development at Consero. I'm joined by my colleague and friend, Tony Esposito, who works very closely with me, and also by Jack McCullough, who's the the president of the CFO Leadership Council. Jack is a great friend of Consero's and also a great advisor as we've grown our business over the years, has helped us as we think about product and our go-to-market strategy. So thanks to you both for joining us. And with that, I'll turn it over to Tony to take us through the next slides.
Awesome. Thanks, Bartley. Appreciate everybody joining us here today. Work on Bartley's team covering private equity and venture capital groups, and think that you'll really enjoy what we have prepared today. So to kick it off with the executive summary, right, I think the first thing that we found, and probably no surprise to this audience, is that companies tend to underinvest in their finance and accounting before investment comes in. And we at Consero think that makes sense, right? Early and growth stage companies will want to focus more on their core competencies, whether that's sales, marketing, product, or just innovating. And when we say underinvest, it can mean anything from companies can't produce timely and accurate financials to maybe they wouldn't be able to pass an audit, or perhaps they're just getting the basics for finance and accounting that will enable them to file their taxes at year end, but not really get insights, KPIs, metrics that will enable better decision making. Building on that is just kind of the investor expectations that are there post-transaction, right? As anyone would kind of guess, investors do have pretty high standards. And in the first 100-day plan post-investment, that's a common area where we'll see portfolio company management teams align with their investors on really upgrading the capabilities across the finance stack. And that can be everything from human capital to systems, technology, and just overall process, which we'll talk more about. And then another piece, which isn't too surprising, is that CFOs really prefer spending their time more on strategy versus tactics. And this can sometimes be difficult because there are tactical initiatives that need to be addressed in that first 100-day plan to optimize finance and accounting functions. And then another thing is, one of the reasons that CFOs get bogged down in kind of the tactical is it could take a lot of time and resources to build out a team, upgrade systems. Our research shows it could take anywhere from 9 up to 18 months to actually build a team, upgrade systems, and define and document new policies and procedures that can scale. And then as a company scales, one of the key metrics that CFOs really watch closely is just finance and accounting as a percentage of revenue. And we have some benchmarking data which we could share with you that came out of the survey, which I think will be pretty interesting. But moving to the next slide, before we get into the survey, just want to share some background on Consero. I'm not sure if everyone knows who we are. Business was founded in 2006 by Scott Tynes and Bill Klein as a modern alternative to actually building and staffing an in-house finance and accounting function. Today, we've got about 1,500 employees worldwide, over 300 clients, and we support them with our finance as a service, or FAS solution for short. And what that actually means is we have a full solution for finance transformation, and then also ongoing managed services within finance and accounting. And it covers the full finance stack, everything from the people to processes to systems. And we've really got a playbook approach. We've executed on it hundreds of times with private equity and venture capital backed businesses. And Jack, just to pick your brain for a second, I know you've had some light exposure to our work through the CFO Leadership Council. Would you mind sharing some of your history with Consero?
Sure. You've been a longtime supporter of this organization, sponsoring us in many chapters in our annual conference. And we've done a couple of webinar type programs together. I think most importantly, as much as I'm fond of Consero, probably more importantly is our members, and we do have about 1,800 members across North America. A lot of them are big fans of Consero. It's the type of thing, once they get into it, it's like, oh, okay, why didn't I do this 2 years ago? So, whenever there's like a survey of, quick and easy things to make your life a little bit easier, Consero is always a top 5 type of response. So if my members like you, I like you.
Fantastic. Well, appreciate that. And more on finance as a service later, but for now, let's get back to the survey and we'll turn it back over to Bartley.
Sure. Thanks very much, Tony and Jack. Great to have you. So as we went out to the CFOs, we asked kind of what are the most important functions for an optimal F&A org? And as we think about the audience here, we try to get a nice mix of first-time CFOs, CFOs who've been brought in post-transaction by an institutional investor, and lastly, CFOs who may be coming in a situation towards the tail end of an ownership period that need to kind of clean things up and get the asset ready for an exit. But what we learned, which was some of it wasn't terribly surprising, but for CFOs, the expectation of institutionally backed companies, the expectations are higher, the timeline is shorter, and the pressure to demonstrate the ability to scale the business is just that much more rigor is required when you've taken on institutional dollars. Investors expect returns and they expect it to happen quickly. And so for a first-time CFO or a CFO who's coming in to a first-time private equity-backed situation, those can often be a new dynamic that they haven't faced before in a prior CFO role. But our CFOs, so when you look at the responses here, it was pretty interesting. So the CFOs responded and specifically highlighted both the functional skill set of the team and the ability to deliver timely and accurate financials as the primary important factors that they need to deliver on rapidly and as a first order of priority when they come into a situation. The second was delivering KPIs, the ability to deliver KPIs to both the board and to the management team of the company. And lastly, a close third was a scalable infrastructure. And so I'd be remiss if I didn't put a quick plug in for Consero, but those are kind of the 3 pillars of where we add value to our clients and really think about ourselves as kind of de-risking those 3 areas within the F&A function. But I just like, maybe Jack, if you could give us a little commentary based on your experience of as you've both been a CFO yourself and you've experienced in advising CFOs through the council, how does a CFO think about that first 90 days and putting their plan and order of operations in place?
Yeah, in the first 90 days as a CFO, I think the most important thing a CFO can do in the first 90 days is actually to build relationships, not only with the team, but cross-functional. And, the job is a highly cross-functional type of job, Bartley. So, it's not like the old days where the best accountant in the company would become the CFO. And, candidly, that's how I became a CFO back in the 1980s and 90s. I was a very good accountant, and that was the main skill set for being a CFO. But it's not the case now. But it's interesting because on your list, and all of them, they were kind of bunched up together, right, between 15 and 20%. So I think what that says is all of them are important. But I put the top 3 in the same order as you. I'm thinking the functional skill sets, and I'm talking for the F&A team totally, not for the CFO specifically. The one that I thought was a little bit weird was that experienced leadership came in last, which is interesting because, a great CFO can make all the difference in the world to a growing company. I think maybe they're underestimating the importance of some veteran leadership with the high growth companies, but all of these are very important. I like CFOs to function on KPIs. Accounting, I always, and I think I mentioned this to Tony earlier, but I remember the first line in my accounting textbook, the first textbook I ever read, sophomore in college. The first sentence was, accounting is the language of business. And, you know, right now I'd say accounting is the language of accountants. Most people who aren't accountants don't really understand technical accounting. And that's where KPIs really make a difference. When you're talking to a non-finance and accounting audience, you really need to deliver information that's timely, that's meaningful, and it's in a language that they understand.
So it sounds like you're part numbers person, but also translating the numbers and editorializing the numbers for the managers of the business, the non-financial managers of the business. Is that a good?
Yeah, that's absolutely correct. Like if you're just going to be a GAAP person, and I'm not knocking people who are, but you know, that seems like you're like a chief accounting officer, or in some environments, a controller. But you know, if you want to sort of be a CFO and support the business growth and strategy, which I know we're going to talk about in a while, you do need to be able to get outside the world of GAAP accounting and do all of these other things. You know, even, you know, fourth and fifth, I didn't mention, but processes and workflows and scaling infrastructure. Those are critical to the success of the organization. And the CFOs play a dynamic part in that.
That's great. Thank you. Cool. We'll move on to, I'll turn it over to Tony then.
Awesome. So to kick this off, I was just doing some reading last week, and Deloitte did a study a while back on the role of the CFO in private equity. And one of their findings was that the turnover rate of CFOs is pretty high in a private equity backed business, about 80% during the whole period of a private equity buyer. And you know, the point here is that as a CFO, you don't have a lot of time to be that catalyst for growth. So with that in mind, we wanted to survey the following questions as part of this initiative. And one was just, how should a CFO divide their time between strategic planning and the day-to-day? Related to that, how many hours per week should senior finance execs spend on recruiting, onboarding, trading, and evaluating their team? And what we found was that the majority of CFOs agree, and this should come as no surprise, that they should be spending a lot of their time on strategic planning rather than the day-to-day operations. But the reality is that it can be difficult because CFOs tend to get consumed with the day-to-day of recruiting a team. One of the things we found is that a third of CFO's work week is spent with respect to just building that accounting team, hiring, recruiting, training, and just staffing. So this, you know, even amidst the current environment of the Great Resignation and just the dearth of talent, has become even more of a challenge and really takes away from the CFO's time to focus on strategy, which, you know, we would say at Consero is really where the CFO's value really lies, in being that strategic business partner to the CEO, investors, the board, to really execute on a company's growth plan. So maybe that's looking at the next M&A transaction, or approaching the capital markets, or just focusing on organic growth and really looking at the numbers and margins and making sure all that's on the right track. So Jack, would love to get your take on it. And, you know, based on some of your real world conversations with CFOs, what would you say are maybe some of the consequences of not having time to focus on strategy?
Yeah, it's interesting because I don't know very many CFOs, and I'd struggle to come up with even one, to tell you the truth, who doesn't tell me they'd like to spend more time working on the strategy of the company. But there's just a reality right now, and you mentioned the Great Resignation, but just, you know, the talent shortage generally, it's preventing that from happening, right? I mean, there's certain day-to-day things that have to be done. And, you know, if you can't hire a competent controller or chief accounting officer, or VP of finance to trust to do these people, they've got to get done. So it's really tough to be strategic when you spend your day putting out fires, one fire after the other, and when you're spending 1/3 of it just with the team. It's probably their greatest challenge right now. And, you know, when you think about it, we've been hearing about the talent wars and talent shortages, you know, probably close to a decade right now. And, you know, I remember as far back as when President Obama was the president, and it continued through the Trump years and whatnot. And we've had a pandemic, and we're still experiencing a talent shortage. So I think it's fair to say we're probably going to be experiencing talent shortages for quite some time. So it's the time, how do you combat that, right? Sure, you want to have a great environment and spend time developing a great team, but one of the things, it's imperative now that you invest in technologies, automation and artificial intelligence, whatever it might be, accepting the reality that you're never going to have the staff that you think that you really need to have. And the other thing is, you asked me, and I didn't even attempt to answer your question really, Tony, but I do that. I'm from Boston. We tend to answer the questions that we want to have answered. But you asked me, if it's important and why. And yeah, it's critical, because when you look across the C-suite, unless you're with that 1 in 100 company where the CEO is a former CFO, you're probably the only financial expert across the executive team. So your involvement in strategic planning is paramount. You should be involved in every single critical strategic decision. And yes, you've got to make the trains run on time, or whatever metaphor you want to use today. But it's critical that you be involved in strategic planning, never more so now, because there have been stories the last 3 years, CEOs and CFOs, that's the most important relationship within the C-suite. They've been keeping the companies afloat more than other executives. I used to think the CFO, and I was one, but I thought they were probably the third most important officer. I now put them at number 2, right after the CEO. So, and they've got to be strategic.
Excellent. Well, Bartley, turn it back
Cool.
over to you to go through some of the consequences.
Sure. Well, thanks.
Give me a
Thanks,
moment to
Jack.
get off my soapbox first, okay?
Well, thank you. And so this was one of the most interesting questions, and I'd say of all the responses we got from the survey, the raw data, the raw emotion that came out of this question. I mean, it seemed like there were very few CFOs who have not heard of or been in a situation where something has gone wrong, whether it's under the people, the processes, the systems that had been implemented, and how that kind of upended the company. I'll give you a recent example. We only went through a process with a potential client last week. It was an asset owned by a private equity firm. It was up for sale pre the most recent economic downturn. They'd signed a term sheet. And during that process, during the diligence process, it came out that this company with a seasoned CFO who had been through multiple PE-backed situations, that they hadn't filed their federal income tax returns in 5 years. So the deal completely bottomed out, and now we're in a different economic environment. And so, it's a very, so the consequences of getting the F&A and the org structure wrong are just absolutely, can be disastrous for both a career and for the sale of an asset. But maybe, Jack, do you have any anecdotes that you might be able to, where you've, similar to the one I just mentioned, or maybe not quite as extreme, but where things have gone sideways?
Yeah, I mean, I've known of situations. I can't say I know anything as dramatic as going 5 years without doing a tax return. That doesn't sound really like an acceptable oversight. But yeah, I've known a lot of companies. They were, competent CFOs, but the team beneath them wasn't that good. And just sort of in the middle of the process of going public, there was kind of the realization this team cannot take this company public. They're a good, solid team for a private company, but the skill set for being a publicly traded company is very different. And, it's fairly egregious for a veteran CFO not to pick up on that sort of thing. And, one that's a little bit more dramatic, it was a company a few years ago. They wanted to go public, and they had done their valuation work. They'd done it, but they had a second-rate firm. I seem to remember it was like the CFO's college roommates firm, something. There was a relationship like that. Well, when time to go public, the auditors kind of had let the improper valuation go through. The SEC said, no, this is garbage. They didn't need to go back and do 3 or 4 years worth of valuations from the word go, because they were completely done incorrectly. And, it ended up, they switched auditors because companies don't want to accept responsibility. They want to blame things on the auditors. By the time they got their ducks in a row, the IPO window closed. This was 5 years ago. I don't believe they've ever gone public. So I understand, you want to spend money on R&D and sales and marketing, but don't be foolish about it. This stuff's important. Companies, there aren't many companies that are going to go far without a world-class finance and accounting team.
Wow. That's incredible. Well, in terms of the responses, it was really, again, this was one of the more interesting questions, but The inability to make strategic investments. That's both from the CEO and the CFO level, that's at the board level, it's at the private equity sponsor level. If you don't have good data and you can't trust the data as one single source of truth coming out of the organization, obviously it's impossible to make those strategic decisions and investments. And then secondly, again, in this environment, if you can't get paid and you can't pay your bills, I mean, this is the lifeblood of an F&A org. If your customers can't pay you and it doesn't flow well into your bank accounts, well, that is a critical issue. And then if you're going out to the markets, similarly, again, in this environment, if you need to go out and raise debt, but you can't trust what's coming out of the organization to be able to act on a dime to go out and raise that capital, you're really on your heels as a company. And I think the interesting thing, again, the difference between being at a private equity backed company for the CFOs we interviewed versus being an independent company is that these aren't pie in the sky, lofty goals. These are the table stakes that investors and the board for sophisticated private equity sponsors, they expect this on day one. So CFOs, as reported, just don't have the luxury of 12 months, 15 months, 18 months to get this right. The timing is super critical. So well, that's great. Well, I'll turn it over back to Tony.
Can I just add one thing to this?
Pardon me?
Yeah, I was going to add one thing, because for the first time in most of our careers, we're facing inflation. I've never really worked in an inflationary environment in the United States, and I don't think most of us have. And just the total economic volatility. So what we're seeing is not only your suppliers, of course, they're always doing credit checks on you and checking you out, but now your customers are doing it more than ever, because you're part of their supply chain and they want to make sure that you're financially viable and ethical and you can stick around. You do something like this in the modern world, the whole world knows about it really quickly. And you're going to, not only all of these things perfectly valid, but you're going to lose customers and suppliers as well. Loss of reputation. Well, maybe we don't want to deal with them. They don't really seem to know how to run a business. Maybe we ought to, replace them with their competitors. So there's other things too that, they don't show up, but I bet if you did this in a year, they would.
That's great. And, I think, again, obviously being the head of BD at Consero, I'd be remiss if I didn't mention here, I think the de-risking of this, the plumbing, the underbelly, this, creating this single source of truth out of the F&A org so that the existing team in-house can look at the data, make strategic investment decisions, and third parties like bankers, debt providers can trust that data on day one is part of the core value again. So the CFOs and the CEO can sleep at night knowing that they've got that one single source of truth coming out of F&A. Great. Well, thanks, Jack, for the commentary. And I'll kick it over to you, Tony.
Sure. So we're looking at benchmarking now, and this really is double clicking specifically on companies that are doing 10 million in annual revenue. So one of the first things that investors evaluate when they're coming into a due diligence process is going to be the cost effectiveness of a company's back office, especially in environments like this where we have an economic slowdown. And any CFO worth his or her salt, like that's been through that investor gauntlet before, they know all about the relentless pressure that comes with optimizing costs and then freeing up dollars to plow back into growth. So sales, marketing, you name it. But at the same time, they have a mandate that they should also be increasing quality of the finance and accounting functions output. So, first area that investors are going to look is really overhead and fixed costs. And that means that, the CFO's got a job on day one to get their house in order. The survey question was, what should the cost of finance and accounting be as a percentage of revenue when a company's doing 10 million in annual revenue? And the survey showed that CFOs say about 10% of annual revenue should go towards finance and accounting costs. The other one was, what's the ideal amount of staff members that a company at 10 million in revenue should have? And the number that CFOs said was 10 or less staff members. And honestly, looking at the answers to both of these survey questions, we at Consero were kind of surprised by this. That's not really typical across our client base. When we recently benchmarked our clients between 10 million and 25 million in revenue, we found that on average, they were spending closer to 3% of revenue on finance and accounting as a benchmark. That's across our entire client base. And it was also worth noting too, that our clients typically have 1 to 3 in-house team members in addition to Consero. And that's very much in line with a recent study that Robert Half put out, benchmarking that a company with less than 25 million in revenue really should only have about 3 people within finance and accounting. But every business is a little bit different. And I think there's the point to hit on there is when you leverage a solution like finance as a service to take care of a lot of the more repetitive accounting tasks, we find that clients have fewer in-house staff that they need, and then more economies of scale to grow and optimize the cost. Another thing worth noting too is that for the top 50% of our companies in that 10 to 25 million in revenue bucket, we actually saw cost of finance and accounting as a percentage of revenue come all the way down to 2%. So one other survey question though, before we ask Jack for his input, would be just around the CFOs were kind of wondering, right, as a company scales, right, from 10 million to 200 million, we were wondering, right, should the cost of that finance and accounting as a percentage of revenue go up or go down? And no surprise to us was that it should either stay constant or go down. So that was the input that the survey showed. So 2/3 of CFOs agreed it should go down as a percentage of revenue as a company scales. So Jack, want to get your input here. Right, for us at Consero, 10 team members, 10% of annual revenue spent on finance and accounting seems a little bit high for us for a 10 million person, 10 million in revenue company. What are you typically seeing with companies that you've worked with in this size range as it relates to human capital, and then also kind of just overall spend in finance and accounting?
Yeah, I had a similar reaction to you. And in fact, I actually thought I misread it. I thought it was 10% of annual expenses should be F&A, which, does make some sense to me, I suppose. But so a $10 million company should spend up to $1 million on F&A. That strikes me as high. And I know that, every situation is unique and you can't judge them all. And there are some businesses that are they have a financial model that's inherently complex. It doesn't reflect on the skill set of the CFO and her team. It's just the reality that, it's a complex financial model. And I get that, but that's the exception, not the rule. What I found a little startling is, okay, so 90% say less than 10%. Okay, I'm with you. But 10% think it should be more than that. And, I'm wondering, are these people, closing their books with stone tablets or something like that? I mean, it's sort of, you wonder what's going to happen to, with spending more than 10%. So.
Mm-hmm. Yeah. No, I mean, similar reaction here across Consero. And then related to that, Jack, would there be any finance and accounting tasks you think might be better performed by an external third party, someone like Consero, just to keep costs as a percentage of revenue lower?
Sure. And you certainly don't want to be involved with, outsource the strategic type of stuff. But I think a lot of the transactional things can be done very efficiently by a third party. AR, AP, payroll, some basic bookkeeping type of stuff. As you get up to controllership and that type of stuff, it becomes a little bit more difficult. And again, every circumstance is a little bit different, right? And I know a lot of companies at the size you're talking about, even up to 25 million, the top finance person is a controller, and they'll have an outsourced CFO, to do some of the high level stuff, but it might only be 4 to 8 hours a week. Now, to do that, you have to have a lot of faith in your controller that she or he can, run the operations really well without a CFO. But, I'm seeing it more and more. And then when the company really begins to take off, then you bring in, the world-class CFO to lead the operation.
Mm-hmm. Yeah, no, that's what we're seeing a lot with private equity-backed businesses, right? They're looking for that right long-term leader, but in the interim, things need to get done. So that's where Consero can help to fill a lot of the gaps. But turn back to
outsourcing is a critical thing today, right? I mean, it used to be futuristic and people want to do it, but every competitive company does some level of outsourcing. It's just the level that makes strategic sense for your overall business.
Thanks, Jack.
Absolutely.
Appreciate the commentary.
Sure.
We move forward here. So this was around the timing of a financial transformation, and the resounding responses here were pretty amazing. So 88% of CFOs say they ultimately underestimated the time that it would take for a full financial transformation, an ERP implementation, or what have you. And so that was fairly consistent. It reminds me of a conversation I had with Wes Edwards, Severica Capital backed multi-location company called MedFirst that Consero has helped roll in 40 some odd acquisitions or multi-locations for that asset for Severica and for Wes. And he mentioned that just through his travels with CFOs and in his own work that he's yet to see an implementation not go beyond budget, beyond timing. And so the consistency of people underestimating that in the CFO suite is fairly consistent. But Jack, curious, from your experience, what have you seen? There are obviously material implications for both the CFO and the investor when that happens, but curious, any anecdotes that you might be able to give us along those lines?
Well, I'll say when I was a CFO, I never went over budget from cost or time basis. I was flawless. I always hit my numbers spot on. So I'm appalled by that. No, I mean, part of me, my reaction when I saw this was 88% and the other 12% are lying type of thing. I mean, it does seem like it always goes over budget. And somebody early in my career told me a couple of rules about digital strategies or ERPs, whatever it might be. Rule number one is it takes about twice as long as you think it will. And rule number two was it still takes twice as long as you think it will, even when you consider rule number one. It's just one of those things. It's easy to underestimate just how difficult a real digital transformation strategy is. Even something like an ERP, which might seem relatively simple, it's not. It's not like you can't bring in an army of people to do it. People still have their day-to-day responsibilities to do. So it's just a very difficult thing, and you're wise to recognize that early. And one of the reasons that the failure rate, or the reason that they go over budget, time and money wise, is failure to plan, and also failure to build alliances across the company. The CFOs and their teams, they should not feel like they should be doing this alone. It should be a cross-functional initiative. They should have buy-ins from the CEO, the C-suite, the president, and even the board, because this isn't just about computer systems. This is your strategy and holding a competitive place in the market. And it's a critical thing. And if it's just important to finance and accounting, it's going to fail.
That's a great point. And it's interesting, heard from a colleague this morning, when Consero did our first implementation going back 12 years or so, it took us, 9 months minimum, maybe even 12 months, but we've now done it hundreds and hundreds of times. And so that's how we're able to do it within that, 30, 60, 90 days. And very few CFOs in their career have done more than one, maybe two ERP implementations. And so the risk is material. And then for the asset, for the company itself, is the company ready for diligence? You want to be ready on day one if a suitor comes along, or another, whether it's a strategic or another private equity sponsor wants to pick up an asset. If it takes you 12, 15 months to get the house in order, there are material risks associated with that as well. So that's super, super interesting. Well, thanks very much. Let me kick it over to Tony then again to wrap us up.
Sure. So I think the question here is, right, how can you avoid the pitfalls of a transformation effort, and then also that talent war that's going on within finance and accounting? And there is an alternative. At Consero, we would say embrace finance as a service, which is a modern alternative to doing everything in-house. So with Consero Finance as a Service, we help investor-backed businesses specifically with the challenges that are associated with a finance transformation. And then also support companies for the long term with ongoing managed services within finance and accounting in that optimized cost structure. So as the business scales, the cost of finance and accounting as a percentage of revenue will go down. So if you, as a CFO watching this, or any of your portfolio companies, if you're an investor, check any of these boxes, right? Going through a cash to GAAP conversion, need just historical cleanup work, thinking about implementing an ERP system, or maybe from a human capital standpoint, need some ongoing accounting support need more management reporting with add backs put in on a monthly basis, just regular monthly financials. Consero Finance and Services definitely worth considering. And this is something that, again, we deal with. Bartley mentioned it every day, hundreds of times, help companies just to up the game from a finance and accounting standpoint, reduce their costs, increase their efficiency, and then really get that CFO back into where they should be. So being focused on strategy and the bigger picture of growing the business. And with that, we can move into some of the quotes that came out of our CFO survey.
Great.
Yeah.
We'll send this, but go ahead, Tony.
Yeah, no, and I was just gonna just say the same. Yeah, we could send this out as a follow-up to all of our attendees.
Great, thanks. Well, thanks everybody for joining. Feel free to ask some questions in the chat. And I saw Mike Gaynor, thanks very much for your question. And so, I think our richest relationships on the private equity side, we do a benchmarking analysis across a portfolio. And so, we look at each portfolio company and kind of chart them out relative to their, F&A or spend as a % of revenue. And so that's a fairly wide range, that kind of 25 to 200 million, but really best in class, top quartile, where we would peg a company at is probably around 1.5% would be kind of best in class as we would view it. And we're happy to send these slides around for sure, as well as the full survey and responses as well.
And Bartley, we had a few questions that came in to me directly when we circulated the invite. A lot of people are traveling. It is the month of July. We appreciate everybody who did RSVP and attend today. We will send out the slides and the recording, so you'll be able to enjoy this on your own time. But Jackie did touch on this, but I'd like maybe for you to expand a little bit more. Do you have any advice for CFOs tackling tough conversations with stakeholders about rising inflation and its effects on the business?
Sure. And I guess what I'd tell people is, with rising inflation, again, it's a crisis that, at least in the United States, few of us have any experience with, by the way, including your board members and your CEO. So you sort of need to make yourself the expert on inflation, and not just the fact that, it means prices are going up, because it's more than that, right? It's how you deal with your suppliers, your customers, and everything else. You need to be talking all the time across the entire enterprise. So you need to be talking to salespeople and supporting them in their pricing strategy decisions. One thing we've learned is, it used to be you could raise prices once a year, most companies, and get away with it. Your customers would, some would argue with that, but usually most of them felt that was okay. But in the modern world, we're learning that a lot of companies are raising their prices 3-4 times a year, and the customers understand it in a way that they wouldn't have a couple of years ago. But to do that, you just need to be doing the communication thing as well. And the other thing, that I always tell CFOs, inflation doesn't affect companies alone. It affects families, which means your employees. And you need to take care of them. You need to make sure that they're, getting the compensation that they need, that, that to survive and have the lifestyle that they need. They're, putting in a lot of time to help you grow the business. You need to make sure that, they can pay for the groceries and their vacation and everything else, because they're dealing with it on a personal level too. And, a lot of companies have told me that they're now doing quarterly salary reviews, just because they want to, it's good as a selfish reason. It's a great retention thing, right? Hey, we're going to look at your salary every 90 days to make sure that you get what you need. But it's also just a nice thing to do, just to make sure that your employees and their families are happy and have the resources that they need to live the lifestyle they want. So did I come even remotely close to answering the question?
You sure did. And Alex had a question also. Tony, I'm going to direct this towards you. We were talking about that, the percent of finance function, and the 3% is what you had mentioned. Does that 3% cost of the finance function, does that include the software as well?
I'm happy to
It does.
Oh, sorry, go ahead, Tony.
It certainly does. And that's something that, we at Consero, we've looked at across our entire client base, and also just companies that we've assessed but haven't formally engaged with. So we have that data. And if anybody's interested in that conversation, there's a whole other presentation that we could go through. It benchmarks companies kind of in the top 50% of our clients, and then more across the thousands that we've looked at, anywhere from 5 million in revenue all the way up to about 100 million in revenue. So we'd be happy to sidebar and go through a presentation with anybody who's interested. But Bartley, absolutely want to get your thoughts on it as well.
Sure, that's right. Yeah, when we do the benchmarking, we look at the F&A org holistically, the kind of people, processes, the software stack. Is the org fully automated, digitized? Are the back-end processes, fully mapped out? And so that cost is all encompassing there as well.
Yeah, I think we have our next webinar topic, guys. We can
sounds like it.
Yeah. That deck. And then one more question. You did touch on this, Jack, a little bit with the workforce, but considering the workforce shortages, how can a CFO tackle workforce planning for 22 and beyond?
Yeah, that's a great question, and I wish I had a simple answer, but because I almost tell people whatever I say certain to be wrong based upon my track record the last couple of years. But planning's tough. I think it's a mindset. You just need to be flexible and recognize things you think are going to happen in 90, 180 days. There's a good chance you're going to be wrong, much less 2 years from now. So you really need to adapt a flexible mindset, invest in technology, outsource where it makes sense, take advantage of it. It's easier and more cost efficient than it's ever been. It's powerful with the global economy. So I would say, take advantage of outsourcing and technology, and never close your mind to a possibility, because the world is going to, how many times has it changed on us in the last 2 years, right? So literally everything I think was during the last 2 years has turned out to be, almost completely wrong, but I might be being hard on myself, but, just a flexible mindset and a flexible structure behind you.
That's great advice.
I was just going to add to that. We know, obviously, at Consero, we do this with hundreds of clients. We know what a big decision it is to kind of hand over the keys and start working with a third party like us. And so part of our process, and I'm sure there are other providers as well, but we do a gratis assessment. And so, we really give the company a look at what are the costs. We provide advice during that process as to what does an alternative look like, what should the company do going forward with or without Consero, in the interest of building that relationship. CFOs move on to other roles, and so we view it's an investment, but it's a good use of our time to provide that kind of advice and insight to companies, even if they decide not to go with Consero. And it's actually just kind of table stakes, because people really need to know what they're getting into when they're partnering up with a firm like ours. So of course, happy to entertain that conversation with anybody that might be interested.